This is our Forex blog for November 6, 2012, and like we do most days, we use our currency meter to find the strongest currencies to buy versus the weak, and we sell the weakest versus the strong. Let's scroll this back and look at it up until noon. And you can see the dollar and the yen. The new currency meter that we use has the options of letting you adjust all the time frames in here. You can see what I've added recently is a daily, weekly, monthly trend. The monthly trend is very insignificant for real-time trading, so it only gets a 4% weight. The weekly trading statistical trend gets 13%, and daily gets 8%. And the rest of the tools, 2/3 of which statistically measure each currency versus the rest, and it measures both the direction, what percentage of dollar pairs are going up or down, and it also measures the statistical intensity of that direction. And it lets you really see which currencies are super strong and which ones are weak. You can see earlier today the euro was weak. One of the strongest ones was the Australian. So you could have traded, and this is not one that I leave running, so I'll bring this up. Now in this case, one of the things that caused such weakness in the euro and strength in the Australian is due to this big explosive move last night. Sometimes after big moves, the market kind of goes sideways and chops around. But basically, you'd be looking to sell this. And basically, you want to look for a pullback and go short. So you might have had a small loss there. Got short again here. You can see it fell 20 pips. You want to wait for a decent, pullback. I wouldn't sell something as small as this right near the lows. But if you get a little bit of a deeper pullback like this, 20 pips, pulls back about 8, you get out of that trade pretty much a break even, short again here, make 20 pips, short again here. And it was after 9 that the euro's weakness pretty much fell off a cliff. You would have been a lot better really trading the Australian versus the yen or the dollar. Let's bring that up real quick. And you can see, unfortunately, this was also due to a news event last night. So you buy the pullback here. This one here took off a little bit. This one, the deeper pullbacks are a little bit better. Let's look at some of the non-Australian pairs. The Swiss was weak. You could trade that against the CAD that was also strong. This one didn't have an explosive move up last night like the Australian pairs did. CAD Swiss is going to be one that you want to be looking to buy pullbacks. And you can see this one right here. It went up, pullback went up, pullback right here went up. Pullback here, you had a loss. Got back in again, nice win. Pullback here, you made money. Pullback here, you made money. And once it finally, I always try to get a feel for where the lows are, and I always kind of draw trend lines on the chart. Initially, my trend line would have been right here. If it just barely breaks it, I'm not going to adjust that trend line. But once that trend line does get significantly broken here, I'm not going to really trade it on the long side until it goes back above those lows. So these are the lows right here. So, I might have bought this little pullback right here, and then once it finally made a higher high, I'm buying pullbacks again. If you look at it from 9 to 11 or so, you can see that the CAD really did not have any strength there. So not only did the trend line get broken, but it was very clear to see on there as well. Let's take a look at the CAD versus the yen today. Super strong CAD, very weak yen, and you can see, especially in this right here, the benefit of the currency meter. You have a nice little flag pattern, wedge pattern, breakout right here. I like those. Once the market is up near the highs, I really want to wait for a deeper pullback. You might have got into a trade here, small loss, got back in again here, made 15 pips. And a lot of times you'll get a two-wave pullback. Kind of goes down, up, goes down, and then when it starts to go back up, I'll get in here. And again, draw your trend lines on here to get a feel for where the trend is. As long as it's, not going underneath that trend line, it's very high probability to buy there, especially once you know that this is one of those currencies that you want to be in. Now, one of the things to know where the likely max profit is draw your fibs from the previous wave. Most of the time it does not go above the 1.618. This was so strong that it did. Another thing you can do, I love doing this, It's one of my favorite counter trend methods. You duplicate a trend line and you project it from the high, and I will oftentimes scale into a position above this area here, especially when it's at or above the 1.618 fib. Get into a big position, and typically you'll get at least a 10 to 20 or 25 pip pullback. This was one of the strongest currencies today, so usually also it'll pull back at least 38% of that last move up, which brings your profit target here to 92, and it came all the way down to about 94 within 2 pips of that. So you can kind of scale into a trade knowing most of the time, 80% of the time or more, it's going to pull back very close to or to the 38% level. Let's take a look at the CAD versus the strong dollar. The dollar's on top in this case, so we want to sell the dollar CAD. And you can clearly see, some nice trades right there. Again, when it's near the low, you want to wait for a little bit deeper pullback before you get short. This one probably would have been a small loss. And again, always draw your trend line on this so you have an idea. And once it broke above that area here, I would have been a little bit hesitant to go short again until it broke the trend line here. At that point, it's relatively safe to get back into that downtrend, and you want to watch it like a hawk until it goes below these lows, and then you're pretty safe. And you can see that these trend lines, a lot of times when a trend line gets broken, it comes back. When it comes back down, it hugs that trend line, and it acts even as resistance later. And here's another good example of how to use the trend line projected off the lows to find a place to get out of your trend trade and to do a quick little counter trend trade to make 10-15 pips. It's such an effective, profitable strategy that I've actually added it to our FX trading signals code so that the computer can take trend line breaks and also duplicated trend lines like this for counter trends while I'm sleeping. That's one of the things I'm working on for my own trading, and I just wanted to share that with you in this class. I've traded with it for years, and it's just a wonderful method. Now, the pound also was very weak throughout the day, so you could sell the pound CAD. Now, really, once this thing started to trend, there was no decent pullback until about right here, and you probably would have had a small loss, and you got short again right here, and you had about a 15 pip win. And at that point, unfortunately, it looks like it broke the trend line here. So I would have been really hesitant to get back into that downtrend until the trend here got broken. And a lot of times when the market goes down a significant amount, you have one of the weakest currencies like this. What you can do is just simply draw your fibs off that wave there, and usually somewhere between the first and second fib target, it's going to run out of steam, and you can get short right here, and you can see it fell very quickly, 10, 20, 30 pips. This is one of those trades that you can kind of scale in lightly from here and get aggressively heavier right here, and it's probably a 75-80% winning trade, and you can see it just did wonderful. Now, if you draw your fibs on there and you want to not watch the computer screen, you can draw just a regular line underneath that fib target, right click on it and say create an alert, and click play sound file. I'll move it over here, and then once you put that on there, you can see it's an alert. When price comes up to that level, it'll play a sound file, send you an email, or send your cell phone a text message. So you will never miss these excellent trades, and you don't have to watch the computer screen. Plan your trades out ahead of time, but use the currency meter to identify the pairs that you most want to be in, so that you don't, on relatively boring days like today, you can catch some wonderful trades without having to mess around with certain pairs. Let's take a look at the euro yen. You also have the option of just simply using our trading signals. If you see a currency super weak, the longer time frame trends all down, you get a sell signal, small loss, sell signal here, it went 20 pips, sell signal here, 6 pip loss, sell signal here, probably break even. And then you got a nice pullback here. Once it exploded up, you got this pullback right here. This led to about a 30 pip move. You probably would have had a small break even or a small loss here, 20 to 30 pip win, and then this buy signal right here led to, and there's another buy signal here, 40 pips. And also notice we found the absolute high up here as well. So if you don't want to use a currency meter, you can really, our trading signals have improved so much that you can just simply trade these. Now, the majority of the longer time frame trends are down, so I would trade the long side a lot smaller than I would sell signals. And another thing is when you use the trend lines in addition to our signals, let's say you drew your trend line right here, duplicated it, plotted it here from the previous highs. When it gets up to that level and you get one of our sell signals, it's a great place to get into a pretty big position. You would have only made about 12 or 15 pips on this, but just doing that alone, you can earn a living trading. Just wait for those signals at these key levels, and you know, you'll find that it works very, very high percentage of the time. It's a very low risk, low stress trade that you're not going to feel nervous putting on once you see it in action 20, 30, 50, 100 times.